All right, so today we're going to do a deep dive into high-yield dividend stocks.
Okay.
Specifically, we're going to be looking at two pharmaceutical giants, Bristol-Myers Squibb and Merck.
Oh, right.
We're going to be taking most of our information from this Motley Fool article called Two High-Yield Dividend Stocks to Buy Early in 2025.
Interesting.
I don't know about you, but that 2025 date really piqued my interest.
Yeah, it makes you wonder what makes these stocks so special.
Yeah, especially looking ahead to 2025.
Right.
So what is it about these companies that makes the Motley Fool think they're going to be winners?
Well, the Motley Fool is known for making investing approachable, and they're really honing in on Bristol-Myers Squibb, we'll call that BMY, and Merck and Company, or MRK for short.
Yeah.
And they're suggesting that these companies offer a really attractive combination of above-average dividend yields.
Okay.
And they have proven business models, so that seems to be their reasoning.
So before we jump into that, I just want to step back for a second.
Sure.
And just,
Yep.
Can you just remind me what a high-yield dividend stock is?
Yeah, so a high-yield dividend stock is one that pays out.
And why should I care as an investor?
Right, so a high-yield dividend stock pays out a larger portion of its profits to shareholders
Okay.
relative to other stocks.
Okay.
So you're basically getting a bigger bonus for being an owner of that company.
So it's almost like instead of the company reinvesting its earnings or using its profits for something else, it's giving it back to the shareholders.
Yeah, and often that signals that they're very confident in their future prospects.
Okay, that makes sense.
Or they operate in a very stable industry
Gotcha, Avi.
where they don't need as much capital to reinvest.
Okay, so let's jump back into pharmaceutical companies.
Right.
And why are these often associated with dividends?
Well, pharmaceuticals, they tend to have a very stable business model.
Yeah, people always need their medications.
Yeah, people always need drugs. They have consistent cash flow.
Yeah.
They're in well-established markets. So yeah, they're able to reliably distribute those profits back to shareholders as dividends.
Makes sense.
And often they need to invest a lot of money in research and development,
Yeah.
which can get expensive.
Yeah.
So this is a way to keep shareholders happy while they're waiting for those big blockbuster drugs to hit the market.
Right, gotcha. So let's zoom in on Bristol-Myers Squibb first, or BMY.
Okay.
They're known for their cancer treatments, right?
Yes. Especially their oncology franchise is a powerhouse.
Yeah.
They really revolutionized cancer treatment with their immunotherapy drugs.
Yeah, and the article actually even mentions breakthrough immunotherapy drugs.
Right, and these have brought in significant revenue for the company.
Yeah, for sure. So what's their dividend yield looking like?
So their dividend yield is sitting pretty at 4.3%.
4.3.
Yeah, which is a good chunk higher than your average dividend yield on the S&P 500.
Okay, so it's higher than average.
So that means you're potentially getting more bang for your buck.
Gotcha, okay. And I know that the article mentioned that they've been growing those dividends pretty consistently, right?
Yeah, they've consistently increased their dividend payouts over the past 5 years.
Okay.
And their average annual growth rate was 7.91% over that period.
Wow. That's pretty impressive in this volatile market.
Yeah, it does.
That consistency.
It really shows a strong commitment to their shareholders and a confidence in their future earnings.
So everything's looking great, right?
Well, not so fast.
Okay.
There's this thing called the patent cliff
Uh-oh.
that we need to address.
Okay, what's the patent cliff?
So think of the patent cliff as a sudden drop in revenue.
Okay.
And BMY's got some major patent expirations coming up by 2028.
Okay.
Two of their biggest drugs, Opdivo and Eliquis, which bring in huge revenue for them, their patents are going to expire.
Gotcha.
And what happens when patents expire is that cheaper generic versions flood the market. Competition gets fierce, and it could lead to a dip in sales for BMY.
Okay, so how's BMY planning on navigating this?
Well, they're not just sitting back and taking it.
You got
They're actually playing offense.
Okay.
And they're doing this through strategic acquisitions.
Okay.
So they've recently acquired a few companies, Mirati,
Okay.
Reza Bio,
Okay.
and Karuna.
Okay.
And these are not just random acquisitions.
Okay.
They're very carefully chosen to strengthen their portfolio.
Mm-hmm.
So Mirati, for instance, focuses on targeted cancer therapies,
Okay.
which aligns perfectly with their existing oncology strength.
Gotcha.
Then you have Reza Bio,
Yeah.
which specializes in radiopharmaceuticals,
Okay.
which is a growing field
Okay.
with huge potential in cancer treatment.
Okay. Interesting.
And then you have Karuna,
Yeah.
who focuses on therapies for severe neurological conditions.
Gotcha.
So they're adding another dimension to their portfolio.
So instead of just taking the patent cliff lying down, they're building up their portfolio.
Exactly. They're building a whole new wave of revenue streams to offset those potential losses.
Okay, and will that help them keep those dividends coming?
Well, that's the billion-dollar question.
Yeah.
Because it really depends on how much those patent expirations impact their future revenue.
Yeah.
And whether these new acquisitions can fill that gap.
Right.
So one thing investors look at is forward earnings,
Okay.
which are basically analysts' predictions
Right.
of a company's future earnings.
Mm-hmm.
And right now, BMY is trading at 8.12 times its forward earnings,
Yeah.
which means investors are valuing the company at 8.12 times what analysts predict they'll earn in the coming year.
Okay, so how does that compare to other companies?
That's actually considered relatively low.
Oh, okay.
It could mean that BMY is undervalued,
Okay.
but it also means there's a risk that maybe their future earnings won't be as high as analysts predict.
So you're saying the Motley Fool is saying it's a good time to buy before that patent cliff hits?
Well, that seems to be part of their logic, that there's a potential for growth there.
Yeah.
And coupled with the fact that the stock might be undervalued, it could make it an attractive buy.
Gotcha. Okay.
But it is a gamble
Yeah, for sure.
on their future success.
Okay, so lots to unpack here.
Absolutely. And we're only halfway through our deep dive. We still have Merck Company to talk about.
Okay.
And they've got their own interesting story
Yep.
in terms of how they're approaching this patent cliff.
Okay, let's jump into MRK
Right?
and see what they're doing.
Yeah.
So they're also a major player in the pharmaceutical world, right?
Yes, they are.
I know them for their cancer drug, Keytruda.
Yeah, Keytruda has been a real game changer
Yeah.
in cancer treatment,
Yeah.
and it's been a major revenue driver for MRK.
And I think that's interesting
Mm-hmm.
that both BMY and MRK have these big cancer treatment drugs
Yeah.
that are facing a patent cliff around the same time.
Right.
So they both kind of have the same problem in a way.
They do.
So how does their dividend compare to BMY's?
So MRK is offering a dividend yield of 3.25%.
Okay.
It's a little bit lower than BMY's 4.3%,
Mm-hmm.
but it's still a good chunk above the S&P 500 average.
Okay, so it's still pretty good.
Still pretty generous.
Yeah.
And just like BMY, they've shown really consistent dividend growth,
Okay.
an average annual increase of 7.68% over the past 5 years.
Okay, that's pretty good.
Yeah, so they're clearly committed to rewarding their shareholders.
Gotcha. Okay, so they're both facing this patent cliff.
Right.
They both have very similar dividend track records.
Yeah.
How are they tackling this patent cliff differently?
So while they're both facing this patent cliff, their strategies are a bit different.
Okay.
So MRK is really betting big on high-margin specialty drugs.
Okay.
So these are medications that are specifically for complex or rare diseases.
Gotcha.
Often there's less competition
Mm-hmm.
and higher profit margins.
Makes sense, yeah.
So think of it as them focusing on niche markets,
Yeah.
where they can really command a premium for their expertise.
Right.
So they're trying to diversify their portfolio
Hmm.
and become less reliant on just Keytruda as
Yeah.
its patent expiration looms.
Gotcha. So they're just trying to spread the risk a bit more.
Exactly.
But if they both have decent dividend yields, how do their valuations compare?
So MRK is currently trading at 10.2 times its forward earnings.
Okay.
So that's a bit higher than BMY's 8.12.
Okay.
So it means MRK is a slightly pricier stock,
Okay.
but that doesn't necessarily mean it's a worse investment.
Yeah.
It could just be that investors are more confident in MRK's strategy
Mm.
or that they see other strengths in MRK's business that justify that higher valuation.
Gotcha. Okay.
That's something that we need to dig a little deeper into
Okay.
to really understand.
All right. So we've talked a lot about BMY and MRK.
We have.
Their dividend yields, their strengths,
Yeah.
the challenges they're facing, the patent cliff,
Mm-hmm.
their strategies. I guess now it's a good time to step back and look at the bigger picture.
I agree.
Why are pharmaceutical companies such an attractive investment?
Well, they're a popular choice among dividend investors,
Yeah.
and for a good reason.
Okay.
Their products are essential.
Yeah.
People need medicine,
Right.
no matter what's happening in the economy.
Yeah.
So that translates into consistent demand,
Mm-hmm.
reliable cash flow.
Yeah.
They're able to pay out those dividends consistently.
Yeah.
And they have a long track record of returning value to shareholders.
Mm-hmm.
And that shareholder-friendly approach makes them really attractive
Gotcha. Okay.
to income-focused investors.
And I know you said earlier,
Yeah,
no investments without risk.
right.
What are the specific risks associated with investing in pharmaceutical companies?
Well, you hit the nail on the head earlier.
Yeah.
The patent cliff
Right.
is a major risk.
Yeah.
When those patents expire on those blockbuster drugs that can severely impact a company's revenue and potentially affect their ability to pay dividends.
Yeah.
So that's a big one.
Yeah.
And the industry is also highly regulated. So changes in those regulations or pricing pressures can also impact their profitability.
Gotcha. Okay.
And then there's always competition.
Right.
New players are emerging all the time, trying to disrupt the market.
Yeah.
So you always have to keep an eye on the competitive landscape.
Okay, so it's a game of weighing the risks and the rewards.
Exactly.
And making sure you do your homework.
Absolutely. You can't just go in blindly chasing high yields.
Yeah.
You have to really understand what you're investing in.
Right.
And that's where resources like The Motley Fool can be helpful. But always remember to do your own research and consider your own individual goals and risk tolerance.
Okay. Yeah. Good advice. So before we wrap up part 1 here, I think it'd be good to just recap the key similarities and differences between BMY and MRK.
Oh, nice. So both companies offer enticing dividend yields, exceeding that S&P 500 average.
Yeah.
And they both have that commitment to consistent dividend growth. But their approach to this patent cliff is different.
Yeah.
BMY is going for that aggressive growth through acquisitions, while MRK is taking that more specialized high-margin route.
Right.
And in terms of valuation, BMY seems to be trading at a lower multiple compared to their earnings.
Yeah.
Potentially making it a bit of a bargain.
Right. Gotcha.
But there's still a lot more to uncover as we go deeper into these companies.
Yeah.
And try to decipher what the Motley Fool's recommendation to buy in early 2025 really means.
Okay, well, we'll do that in part 2.
Yeah, in part 2, we'll get into those details.
Awesome. Well, thanks for joining me today.
My pleasure.
And we'll see you next time.
See you then. Welcome back to our deep dive. You know, we've been really getting into the nitty-gritty of Bristol-Myers Squibb and Merck.
Yeah, and how they're both getting ready for that patent cliff in 2028.
Right.
But I'm still a little confused.
Yeah.
Why is the Motley Fool saying buy these stocks early in 2025?
Right.
I mean, isn't that kind of counterintuitive with that patent cliff being right around the corner?
Well, you know, the Motley Fool, they seem to be thinking long-term.
Yeah.
They're looking past that potential short-term dip in revenue.
Okay.
And they're anticipating, a rebound after the patent cliff.
Okay.
So they're essentially betting that both BMY and MRK can weather the storm and come out stronger on the other side.
Okay, so you're saying they're saying that those strategies that these companies are using will actually be effective.
Exactly. And remember, those strategies were BMY's aggressive acquisition strategy to kind of replenish its pipeline.
Yeah.
And MRK's focus on high-margin specialty drugs. So the Motley Fool sees these as proactive steps, not reactive. They're saying that these companies are ahead of the game, and they're positioning themselves for success even after the patent cliff hits.
So for someone like me who's, still learning about investing, what does that actually mean?
Right.
Should I follow the Motley Fool's advice and buy in early 2025?
Okay, so that's a great question, and it really depends on your individual investment goals, your risk tolerance, and your time horizon.
Okay.
So are you in it for the long haul?
Yeah.
Do you believe in these companies
Yeah.
to overcome this patent cliff?
Yeah.
If so,
Yeah.
buying in early 2025 might make sense.
Okay.
Because you could snag those shares at a lower price.
Right before everybody else jumps on board?
Exactly.
Okay.
And if their strategies do pay off, then you could ride that wave of future dividend growth and stock appreciation.
Okay, so what if I'm, a little more risk averse?
Right.
Or I need to be able to access my investment, sooner rather than later?
Okay, so if you're more risk averse or you have a shorter investment horizon, then waiting and observing might be the wiser approach.
Okay.
You can track their progress, see how their strategies unfold, and then make a decision.
Right. After the dust settles a little bit.
Right, based on their performance and what the market's doing at that time.
Okay, but let's say hypothetically,
Yeah.
I decide to follow the Motley Fool.
Okay.
What should I be paying attention to as we get closer to that 2028 patent cliff?
Okay, that's a great question. So you want to be a financial detective.
Yeah.
Keep a close eye on those earnings reports.
Okay, the quarterly and annual report.
Exactly.
Oh.
Pay attention to their revenue growth,
Okay.
profit margins, And of course, any announcements they make about dividends,
Right.
any signs of weakness in these areas could be an early warning signal.
Right.
So you also want to track the progress of their specific strategies.
Okay.
So for BMY, you're watching those acquisitions.
Right.
Are they being integrated? Well,
Are they delivering the expected results?
Yeah.
And for MRK, are they gaining traction in those niche markets for those specialty drugs?
Okay, so I'm looking for signs that those strategies are working.
Exactly.
And I know we talked about BMY's debt earlier.
Right.
Is that something I should be worried about?
Debt is definitely something to keep in mind.
Okay.
Especially as we get closer to 2028.
Okay.
Because high debt levels can really limit a company's flexibility.
Okay.
And potentially impact their ability to maintain those dividend payouts.
Okay.
So if you start seeing their debt levels rising or their credit rating starts to slip, that could be a red flag.
Okay, so this has been a lot of information about BMY and MRK.
It has.
What about pharmaceuticals as a whole?
Right.
Are there any industry trends?
So the pharmaceutical industry is constantly evolving.
Yeah.
One of the biggest trends right now is personalized medicine.
Okay.
Where treatments are tailored to a person's individual genetic makeup.
Yeah, it's interesting.
So it's really exciting.
Yeah.
But it also comes with challenges. Like cost complexity.
Okay.
And then there's drug pricing.
Right.
Which is a hot topic.
Yeah.
Governments and insurance companies are scrutinizing the high cost of medication.
Right.
And that could put pressure on those profit margins.
Yeah.
And potentially impact those dividend payouts.
Okay.
And we can't forget about competition. You know, new companies are always emerging.
Yeah.
So you have to ask yourself, can companies like BMY and MRK maintain their dominance and adapt to this changing landscape?
So it's not enough to just analyze a company.
Right.
You have to look at the whole industry.
Exactly.
All the trends that are happening.
It's about understanding that whole ecosystem that these companies operate in.
So much to learn.
There is.
Well, thanks for guiding me through all this.
My pleasure.
It's very helpful.
Good. I'm glad.
I guess before we go too far down that road,
we should come back to the Motley Fool.
Yeah.
See what else they had to say.
Good point. Yeah, we've been so focused on the patent cliff.
Yeah.
And their strategies that we haven't really dug into their reasoning.
Right, exactly.
For recommending these stocks in the first place.
Right. So what exactly did they say?
So we'll dive into that in part 3.
Okay.
We'll unpack their rationale and see if it holds water.
Okay, sounds good. All right, so we're back for the final part of our deep dive into Bristol-Myers Squibb and Merck.
Yes, and we've covered a lot of ground.
Yeah.
We've looked at their strengths, weaknesses, their dividend histories, their strategies for tackling the patent cliff.
Right, but we haven't really touched on the Motley Fool's reasoning for recommending these stocks.
Exactly.
So what do they say?
Well, the Motley Fool seems to be placing a lot of emphasis on the company's ability to generate cash.
Okay.
And their history of strong dividend growth. They're basically saying, don't panic just yet.
Okay.
You know, these companies have a proven track record.
Yeah.
And they're actively addressing the patent cliff issue.
Okay, so they're not dismissing the patent cliff?
No, not at all.
But they're putting a lot of faith in those strategies, right?
Yes, they're really highlighting BMY's strategic acquisitions and MRK's focus on high-margin specialty drugs.
Right.
And they believe that these moves will help them not only survive the patent cliff, but actually thrive.
Okay, so they're saying that these companies are going to come out the other end.
Okay. Yes, and potentially even stronger.
Interesting.
Because they've used this time to diversify and strengthen their portfolios.
Okay, but let's play devil's advocate for a second.
Sure.
What if it doesn't work?
Well, that's always a possibility.
Right.
No investment is without risk.
Right.
And especially in an industry as volatile as pharmaceuticals.
Okay.
So what if BMY's acquisitions don't quite live up to expectations? Or what if those companies don't integrate seamlessly into BMY's existing structure?
Right.
Or what if they run into unexpected regulatory hurdles?
Yeah.
Or research setbacks?
Right. There's a lot that could go wrong.
There is. And on the MRK side, what if they face unforeseen competition in that specialty drug market?
Right.
Or what if those high profit margins get squeezed by pricing pressures?
Yeah, you never know.
You don't. And these are all valid concerns that investors need to carefully consider.
Okay. So it sounds sounds like the Motley Fool is taking a bit of a calculated risk.
I think that's a fair assessment.
Yeah.
They're betting on the long-term potential of these companies.
Right. But there's a chance it could backfire.
There is. It's a high-stakes game.
Yeah.
And ultimately, it comes down to each individual investor to decide whether the potential reward outweighs the risk.
Okay. So if you're comfortable with the risk, you believe in the companies, then the Motley Fool's saying go for it.
Yeah, but if you're not comfortable with that level of uncertainty, or you need quicker returns, then maybe it's best to wait and see how things play out.
Right. Good advice. Well, this has been a really interesting deep dive.
I agree.
We've learned a lot about high-yield dividend stocks.
We have.
And specifically BMY and MRK.
Yes. And the challenges they're facing, but also the opportunities.
Right. And their potential for growth.
Exactly. And I think the biggest takeaway here is the importance of doing your homework before you invest.
Right. Don't just jump in blindly.
No. Understand the industry, understand the companies, understand your own risk tolerance, and make informed decisions.
Okay, great advice. Well, thank you so much for joining me today.
It was my pleasure.
And for sharing your expertise.
Anytime.
And to our listeners, thank you for tuning in to this deep dive, and we'll see you next time.